What's going on, everybody, and welcome to my April day trade recap, where we are going to look at the details of all the day trades I took in the month of April. You're going to get to see the real money equity curve. You're going to get to see my real account value. We're going to even dive into the fees that I pay for each one of my trades and calculate that into the P&L, because my system does take a lot of day trades. We are scalping SPY. We are scalping the S&P 500. It's a lot of trades. I know fees are a concern for a lot of people when they watch me trade. Like, there's no way you make money against all the fees you're paying. So we'll look at that too. And we'll also dive into some other interesting things as we continue to go along. So if you're excited, please hit the like button. It really does help. If you're new around here, want to continue to follow along and enjoy the transparency, hit the red subscribe button down below. With that being said, let's just jump into it. So the chart I have set up behind me is obviously SPY. It is the S&P 500. It is the daily chart. So each one of these bars represents a day, and it's starting from April 1st and ending on April 29th. So you are looking at the performance of the S&P in the month of April. Now, quite obviously, as you can tell, not a good month, not a very fun month for SPY for the S&P. And what do we trade on this channel with our system? I only trade SPY. I only take trades on the S&P. We scalp SPY with a coded, profitable, back-tested, algorithmic type system, right? So we're going to get the chance to look at today how I compared against the market over this month. You would like to think I was able to beat this performance with day trading, considering how weak the month is. You're going to get a chance to look at those real numbers. So let's go ahead and do the performance for SPY. Funnily enough, it actually closed exactly at 412. Ooh, market makers, somebody, maybe tinfoil hat, but it closed exactly at 412 on the last day of the month, and it opened at 453.31. So we do 412 minus 453.31 equals 41 points down. So the S&P dropped over 41 points, or SPY specifically, dropped 41 points and 31 cents. Now, I trade 100 shares of SPY at a time. That's just the sizing that I use in this market. So let's go ahead and compare. What if I would have just bought 100 shares of the S&P on the first day of April and held it? Because realistically, if you're day trading, you want to be outperforming the markets, or especially if you only trade one ticker, you really want to be outperforming that ticker, or else what's the damn point? If you could have just bought it and held it, what was the damn point of taking all the day trades that you took, right? That's kind of how you really prove profitability. You have to be able to beat the buy and hold strategy, or else you could have just bought and held, right? But obviously this month I would have lost over $4,100, $4,131, if I would have just bought 100 shares of SPY in the first of this month and then sold it at the end. Let's go ahead now and pull over our performance, and we made $500 this month. So that's a pretty damn good outperformance. I know $500 in a month isn't like holy crap, but considering, I mean, like, this chart looks way better than this chart, doesn't it? Considering we only traded this chart, to have our P&L look like this during that time frame is pretty good. It's a really, really good overperformance. I mean, what? It is a $4,600 outperformance of the buy and hold strategy, of what the buy and hold strategy would have been over that time frame. So also looking down on our win percentages, our worst win percentage was 47%, and that was actually the only day we dipped below a 50% win rate. So every day bar one, and that was barely under. We won at least half of our trades. We put together three 100% win rate days. You know, the average. I wish you could look at the average win rate. That actually might be a thing on the next screen we're going to look at. Let's go ahead and go into the calendar as well. I've already done this math. There is 1, 2, 3, 4, 5, 6 red days. Hold on, I did the math here. There was 20 trading days, and 6 of them were red. That means that 70% of our days this month were green, which is pretty impressive as well. Pretty happy with that. Let's go ahead for right now and jump over to the detailed as well. So once again, total gain loss $505. Average daily gain loss. This means every day I logged in and started trading, this is what I could expect to make. That's combining the red days and the green days, obviously. Average winning trade 28, average losing trade 38. I think this is a good time to go ahead and pull up our back test. So this is the back test we ran when we were proving this system. And this is really what you want to be comparing your journaling with, right? What we're looking at here in TraderView, I consider it, or I call it forward testing. This is my trade journal, and it's very important to do. I could not recommend journaling more. If you're struggling trading, start journaling your trades. I know it's work. I use TraderView. It does cost me $30 a month, but it takes all the work out of it. I think that's worth $30 a month, not to mention that it's a tax write-off. But I think this really does help. Anyway, when you back test, you have this back test here. That's all great and dandy. You then need to be journaling and ensuring that the actual money trades you're taking, you're able to match this back testing, or else you're not doing it right and you're not going to be profitable, right? So the first thing I want to take a look at here is the average win being $28 and the average loss being $38. Now, the back test had the average loss at 31 and the average loss at 30. Now, it's not so much the exact numbers that concern me here, 31.30 versus 28.38, whatever. The issue is the gap, right? The average winning trade here is a $10 gap between the average winner and the average loser. Here, it is only a $1 gap. So that's something I really need to work on tightening up. And I think what is causing it is, if you guys have been watching my live day trade recaps all month, you'll see that I sell half quite often on my winners. So I'm not always letting my winners fully play out to the extent that they're supposed to be. Therefore, the winners are a little bit smaller, but I'm never doing that on the losing side, right? I'm never like, oh, I'm down a little bit, I'm going to take out half. I always let my losers play all the way out. So I think going forward, and once again, this is why you journal, because you can learn things about this and you can learn how you can improve. I'm really going to stop that selling half thing. I'm really just going to wait till the bar closes and exit as the system does, so that we can start to tighten this up according to the back test. We can start to meet the back test a little bit better with our actual trades, our actual forward testing. So we did take 256 trades this month. Now let's jump into something else here. Total number of trades, 256 trade. That's a lot of trades. Did you actually make any money? It took you 256 trades to make $500. The fees got to be outrageous. There's no way you actually made money, right? Let's go to our TD Ameritrade accounts. This is the transactions from my actual TD Ameritrade account, right? We're really diving into the transparency here now, aren't we? But you can see here the regulatory fees. So these are the fees I pay every trade. It's 22 cents, 23 cents. I think it's a little over 22 because sometimes it's 23. And you can tell here where I sell half. It's 12 and 12. I think it's a little bit more expensive when you sell half for some reason, because that would equal 24 cents. But it's right around 23 cents a trade, and you only get charged on it when you sell. If you're like, well, why are a lot of them zero? Those are my buys, right? It charges you the regulatory fees on sales, but it's 22 cents a trade. So you see I bought here, exited here, paid a 22-cent regulatory fee, 23 cents, let's call it, just to be safe, even though I know it's a little under 23 cents. Let's just be safe and call it that. So we took 256 trades. Let's go ahead and do this math. We took 256 trades, multiply that by the, once again, conservative 23 cents. It's not quite 23 cents a trade, but conservative. So this month, I paid $58.88 in fees. So we can go ahead and subtract that, right? What did we make? 505. So it's 505 minus 50. Once again, conservative. It was just shy of 59. So we made $446 this month. So yes, the fees eat into it a little bit, but it's still profitable. We definitely outperform those fees, right? I'm using TD Ameritrade, if you couldn't tell from this screen. Obviously, I can't speak to what every brokerage is going to charge you. TD Ameritrade is quite obviously a commission-free brokerage, and I could promise you it depends on what your commission structure is, but this scalping strategy would not work if you only have access to brokerages that charge you commissions. It's just kind of how it is. There's nothing I can do about it. You have to create a different kind of system, different kind of strategy, which we will continue to do here on this channel moving forward as well. This is the only one we have for now, but I am working on building other systems as well. So yeah, I just want to walk over that. So there's a real P&L for the month after fees, $446. But the system does still work, right? Because the fees are so small. These are your ECN, your SEC fees, your exchange fees that are fractions of a penny per share. That's what those fees are. And like I said, there's no added commissions from TD Ameritrade. So that's very nice. Now, number of winning trades, 155. Losing trades, exactly 100. Cool. 60% win rate. If we look at the back test has a 56% win rate, 57 call it. So we actually outperformed that slightly, but just about in line there. So that's good. We did have one trade where we got the exact same entrance and the exact same exit. That's what a scratch trade is. It's actually kind of surprising you get any, because I do use market orders. So it goes down to like the thousandth of a penny sometimes when I hit market orders. It's surprising that we even got one that was exactly the same. Our max consecutive wins, 10. Max consecutive losses, 5. That's nice. That means, 1 point this month. We won 10 trades in a row. We only lost 5. Largest single trade gain, 157.56. Largest single trade loss, 199.01. We know this is a thing. Once again, pull over the back test. We know that the losers can be bigger than the winners. The losers will be bigger than the winners. It's part of the system, but obviously the win rate keeps it so that over time, quite obviously, we trend in the correct direction, right? So we're perfectly ready for this. And in the fuller back test, we had a max loss of 339, max win of 255. So we didn't really get close to what we could lose or even really could make in a single trade. So that's nice. Average per share gain or loss, 2 cents. Average trade gain or loss, $1.97. Now this is something else I want to highlight. Our average trade gain loss being $1.97. In the back test, our average trade is $4.25. That's a number that's way off. And that, once again, I think has to do with the fact that I'm selling half early on my winning trades, not really letting my winning trades fully play out. So that's something I'm, once again, going forward into the next month, I'm going to stop doing, right, to try to get this up higher, closer to 425 instead of at 197. So look for us to stop taking those half orders. There was a lot of debate actually in my comments. I say a lot. A handful of people brought up, Trey, you're doing good selling half where you are, or Trey, you shouldn't be selling half where you are. Guess what? What is the point of all of this? Is to build a system that works. It's proven to work via statistics. Right now, since we journal and since we backtest, we have a backtest to compare against. We know for a fact that taking out half is not the right idea. Like taking out half early is not the right idea. We can see it statistically, and that is trading, right? These stats, these numbers, everything we're looking at might sound boring and might be a little bit confusing if maybe you're new to trading, but this is what trading is. Real stats. It doesn't matter what you think. There's no arguing. You literally look at the numbers. I go, okay, looks like selling half isn't working. I'm not making as much money because I'm selling half too early. So now I'm going to stop doing that moving forward. That's the point of all this, right? The profit factor, 1.13. I know that's not very high. Obviously, anything over 1 is good. You're making money. I know 1.13 isn't very high. Once again, this is a very, very scalpy strategy. We're not the next stats, actually, we are not in trades very long. So that's kind of just what happens with scalpy type strategies, especially scalpy strategies on an index. I'm not trading low floats where like sometimes you might catch a 10, 15, 20% rip. So that's kind of part of the game. And once again, it's all good because we know it works via our equity curve, right? So I believe that is all the statistics. We can scroll down through some of this stuff as well. Look at this, by the way. Oh, this is something I really want to highlight. Look at how the first 30 minutes of the day performed this month. I lost $830 in the first 30 minutes of the day this month. You guys have been watching the live day trade recaps. I only show you I show you live recorded the trades from the first hour, and then I show you the other trades as well, but they're not live recorded like the first hour. And you could like, well, Trey, you're losing a lot of money. Yes, but I'm able to bring it back in the afternoons. We might need to look at creating a separate system for the first hour, or maybe we don't. Once again, over time, backtest, we know the system makes money. But this month, the first half hour it just did not work very well. And that might have to do with the insane volatility or the insane downward volatility of the markets this month, especially out of open. Probably has a lot to do with it, actually. But it's something to keep an eye on. And once again, this is why you journal. Now you can see this, statistically proven. First half hour did not go well. Luckily, the rest of the days went well so that we were obviously still able to make money. But yeah, so let's go ahead now and let's just clear the filter. Let's go back to, I clicked the wrong thing. Let's go back to only looking at trades taken with the system, which by the way are the only trades I took this month. I didn't take anything outside of the system this month. Let's just do a quick comparison to last month. So last month, performance by month of year should be a thing. Here it is. So last month we made $836. This month we made $505. So a little bit of a drop, but once again, it was a pretty darn tough market out there. So that is it, I believe. I believe that is everything I want to go over for this month of trading the S&P 500 Trading SPY, Day Trading SPY. Once again, we'll filter it to just start at the beginning of the month. Made $505. Once again, full transparency. After fees, that's actually $446. I really hope you guys appreciate and enjoy all the transparency you do get. Yeah, hopefully you guys do enjoy that. If you enjoyed that, if you enjoyed the video in general, please hit the like button. Really does help. Once again, if you're new around here, make sure you're subscribed. I post these recaps. You know, if you just watched this and you want to see the system in practice and follow along with the trades I take going into next month, make sure you subscribe as I post them every day on this channel. With that being said, I'm going to go ahead and sign out of this video. I will catch you all in the next one.